How to read the candlestick. What is candlestick chart? A candlestick chart is a popular way to represent the price movement of an asset, such as stocks, forex, or commodities, over a certain period of time. Each candlestick represents a single day, or another time frame, and displays the asset's opening, closing, high, and low prices. Here's how to read a candlestick. First, the body. The main part of the candlestick is the body, which shows the difference between the opening and closing prices. If the closing price is higher than the opening price, the body is usually drawn as a hollow rectangle, white or green, and is referred to as a bullish candle. If the opening price is higher than the closing price, the body is filled, black or red, and is referred to as a bearish candle. A green or white candlestick is formed when the price of an asset opens, drops to a low, rises to a high, and closes above the opening price. A red or black candlestick is formed when the price of an asset opens, rises to a high, drops to a low, and closes below the opening price. Second, the shadows. The thin lines extending from the top and bottom of the body are called the shadows or wicks. They represent the high and low prices for the period. The upper shadow represents the highest price during the period, while the lower shadow represents the lowest price. Third, the length of the body and shadows. The length of the body and shadows can provide insight into market sentiment and the strength of price movement. A long body indicates a strong price move in the direction of the close, while a short body suggests limited price movement. Long shadows indicate high volatility, while short shadows indicate limited price movement. Example, suppose a stock has an opening price of $100, a closing price of $105, a high of $107, and a low of $102. This would be represented by a bullish candlestick with a green or white body of limited length, indicating limited price movement, but with long upper and lower shadows, indicating high volatility. In some cases, candlestick can have a small or no wick. This type of candlestick is called a marubozu, which means shaved head in Japanese. A marubozu candlestick is formed when the high and low prices are the same or very close, resulting in a candle with no or a very small upper or lower shadow. The absence of wicks or a small wick indicates that the price has not been challenged and has moved in one direction for the entire period. This suggests that the market is very strong in the direction of the close and that there is little resistance to the price movement. A candlestick chart can also have no body and only wicks, also known as a doji pattern. A doji occurs when the opening and closing prices are the same or nearly the same, resulting in a candle with no body or a very small body. The doji pattern signals indecision or a potential reversal in the market. It occurs when the market is moving in one direction, but then reverses course, indicating that buyers and sellers are in conflict. A doji can indicate that the market is losing its previous direction, and that there is potential for a change in trend. In conclusion, reading a candlestick chart involves understanding the relationship between the opening, closing, high, and low prices, as well as the length of the body and shadows. This information can provide insight into market sentiment and the strength of price movement, allowing traders to make informed decisions. Feel free to leave any comments or questions you may have. To stay updated on our latest content, make sure to subscribe to our channel and turn on notifications by hitting the bell icon. Disclaimer: the analysis presented in this video is for informational purposes only and should not be considered as a recommendation to buy, sell, or hold any security. Before making any investment decisions, it's important to conduct your own due diligence and carefully consider your personal investment objectives, risk tolerance, and financial situation. The creator of this video may hold a bias or have positions in the shares mentioned, and cannot be held responsible for any losses or damages that may result from following the information presented in the video. Please consult a financial advisor before making any investment decisions.